First half of 2023 is in the books in the world of real estate here in the Atlanta area, and it was the slowest first 6 months of the year that we've seen since about 10 years ago. What we're going to talk about is why is that? We're going to talk about what comes next as we look forward. What's going to happen in the second half of 2023? Are we going to stay slow? Some of the indications say, yes, we are. Buckle up. This is Steve with the Malone Home Team, EXP. So let's break it all down. What have we seen this year? We've seen a better year in real estate than we saw at the end of last year where things just completely tanked. But when you compare this year, not only to the pandemic years, which were crazy, but to the pre-pandemic years and the number of closings, things like that, this is probably the slowest year we've had in the last 9-10 years. Probably go all the way back to 2014 to see the first 6 months having fewer closings than what we've seen in these first 6 months. And then we look forward at what's going to happen. And I just don't know what's going to happen as far as what's going to change the direction of this market. So here's what we're going to do. We do this every month. We do a deep dive. My apologies again. I'm a nerd. I'm a dork. I really love numbers. We're going to break it down, get into the numbers, and really go data heavy because the truth's in the numbers. And we're going to look at some trends. I think that there's going to be an end to this cycle. I think things are going to relax a little bit. But I don't think that we're going to land where everybody's been hoping that we were going to land. I think everybody was hoping we were going to land where interest rates got back in the upper 4s to low 5s. A whole bunch of buyers came back, and real estate took off. That's not going to be where we land, I don't think. We're going to show you some charts that show us that we're kind of in a little bit of a new norm. We'll get a little bit of relaxing from the interest rates from where we are now, but don't hold your breath if you look for interest rates to get back in the 4s. You know, I've talked to people on the phone saying they don't want to buy until interest rates get back into the 3s. And I was flat out telling them, you may as well just spend your money and do something else because it's going to be years and years and years before interest rates are back in the 3s. Could be wrong, but there's no indication showing that's coming. So let's buckle up, look at some stats, and then once we look at all the numbers, I'll give you my idea of what's going to happen the rest of the year. Here we go. All right, let's break into the numbers. Try not to bog it down too much because I want to give you some ideas of what's going on as far as trends, good, bad, and ugly. And then we're going to talk about kind of what's driving it. And then after we look at all the stats, we bust open the onion, peel back all the layers. Then I'll give you my 10 cents on what's going to happen next, things like that. So first, let's take a look at what's going on over the last month. Here's where we are. Average sales price in Atlanta up to $533,307. Actually higher than it was back in June of last year. That was the peak. We're past the peak. Okay, so even though we had the big dip, now past the peak. Okay, another thing I want you to see is the price per square foot on average in Atlanta, $217 per square foot. Last year during the peak, we were at $216. Came down, and then we went back up. We're above where we were. I say all that to say that any ground that we may have lost in Atlanta, we've regained. Okay. The reality is market's been pretty flat. It's been kind of going up a little bit. So everything is still on the up and up in the Atlanta area. Other parts of the metro or of the country, I should say, saw bigger drops because they had much more inventory on the market. We have not had inventory. That's the months of supply. We'll talk about that in just a second. So looking at prices, looking at price per square foot, we have done well. Okay. That's the good news. If you're a homeowner, you've got equity. You're back to where you were. Everything is doing great right now. Okay, good news. Now, let's take a look at what's gone on as far as number of new listings. We've been adding more listings. Last month, we added about 7,500 more listings. That's more than we had in May, more than we had in April, more than we had in March. One of the highest months we've had since September. We had a lot of people jump in last month. That's the good news. Pending sales, though, way down. We're down 47.86, way down from 52.74. Closed sales, way down from 55.69 to 50.86. So that's down about 10%-ish or so. So what does that mean? Means, click on that. We've added more listings. We've had fewer sales. So the number of homes for sale has actually gone up a little bit from 93.05 to 99.76. That's the highest since we've had since January. And the months of supply as well, highest since January. We're at 2.0, we're at 2.1 right now. So the number of homes coming on the market is increasing. That's good news. We don't want to have another situation where we have, like 1 month of inventory on the market. That's no good for anybody. All right. It's just going to lead to crazy escalation in price where you have 15 to 20% up every year. It's just an unsustainable run, right? So this is much more sustainable, something around 2%. But keep in mind, when you look at month supply, I'm going to show you this. Let's see, instead of 3 years, let's look at the max. So I want you to get perspective. Yes, it's gone up from 1.9 to 2.1, but we say this all the time, month supply. And for the millionth time, we'll do it again. Month supply is if we basically take all the homes that are on the market, we don't add anything else to it, and we sell those homes at the rate that we've been selling them, how long would it take to sell everything? 2.1, that's where we are. This is where we were way back coming out of the pandemic, or sorry, out of the big crash back in 08, 09. Saw a crap ton of inventory through 2011 and 2012, and then things started to relax. Anything below 5, really anything like 7 to 5 is kind of a neutral. Anything below 5, like 3 to 5, seller's market. Below 3, strong seller's market. Below 2 is crazy seller's market. Anything near 1 is like bananas, right? So we got below 5 way back in 2012, and we've really been below 5 since then. So we've been in some form of seller's market since then. And look, we've been in this kind of 2 to 3 range for a while through 16, 17, 18, 19, 20, just that 2 to 3 range. And then pandemic hits, and then boom, we're down in the ones. Well, once it bounced back up, again, we're 2.1. That's still a lot lower than it was through most of these decent years that weren't necessarily pandemic years, right? So you got to look at the whole thing in perspective. Yes, in the last month, it's gone from 1.9 to 2.1. It's a jump, but we're not going to freak out about it. It's okay. It's still a very strong seller's market. Okay, so percentage of list price, that's still strong, running at 99.9. The percentage of original price, that's 98.9. That's run pretty strong. Dollar volume, we had $2 billion worth of sales last month. That's down a little bit. All these stats show us, and shows depending is also down a little bit, but I think it's more of a reflection of the number of homes that are on the market more than a lack of buyers, I would say. Here's what we're going to look at, though. I want you to look at this right here, because this is the interesting one that we're going to look at. This is the total number of sales first 6 months of the market. So this last 6 months, June 2023, 27,560. That's the first 6 months of the market, or first 6 months of the year, I should say, in the Atlanta market. 27,560. We're going to look max so we can see there's 27,560. We got to go all the way back. If you go to June of 2014, it's 27,620, slightly above where we are this year. June of 2013, 27,492. That's last time. That was lower. So 10 years in Atlanta since we've seen a start to the year with this few homes. Okay, so yes, home prices are going up, really driven by the fact that there's not a lot of homes on the market. Market's healthy. The economy may not be necessarily crazy good right now, but the economy is going good right now. Okay, there's no indications that there's anything bad coming, but it's been a very slow start to the year. Much slower than some of these, 16, 17, 18. It's been a slow start to the year. And the reason why is interest rates. This has been our thing. This is for the last year, okay? 7% is where we are right now. As of this recording, we're 7.09, according to Mortgage News Daily. Check them out every day. If you're a dork and love this stuff like me, you know what? I love you. I'm with you. Check it on mortgagenewsdaily.com. I have it on my phone. I look at it all the time religiously. But really, for the last year, it's been between 6 and 7. Okay, we had this little dip back here in July and August last year. Thankfully, this is where I bought a rental property in here, so I got a really good deal before everything went crazy. Okay, I say all that to say this. I'm going to take a look at this too. We're in the middle of the new normal. Okay, this is since October. These are the rates. There's not a lot of change here. It's gone from 7 to 6 to 7 to 6. We're holding in the 6 to 7 range. Maybe hair under 6, maybe hair above 7. That's where we've been. The economy has not appreciably changed to drive it down further. Unemployment rate has been, and we're going to take a look at that in just a second, that's been the thing that is just holding and won't break. It's the last thing. It's the last domino to fall to show us that the economy is slowing down. But because the rates have held in the 6 to 7 range, a lot of folks are sitting on the sidelines waiting for interest rates to go down. This is the latest projections from Fannie Mae, MBA, and NAR. They're showing rates in the sixes for Q3. Maybe we get in the fives, Q4, Q1, Q2 next year. I'll be 100% honest with you. What we're looking at right now, unemployment rate is holding low. Okay, here, I'll just go ahead and show you. Last thing I wanted to show you, unemployment rate. Here's your unemployment rate. 5 is where you have a healthy unemployment rate. Yeah, I mean, from a standpoint of, do you want to have a job? You want a low unemployment rate. That's great economic news. Great economic news is bad for mortgage rates. Okay, bad economic news is great for mortgage rates. If you have a recession, mortgage rates go down. We're not having a recession. You can have 3.6 was where the unemployment came in last week. The other thing that we're looking for is tomorrow we're getting our latest update on the CPI, which is the inflation data. That comes in tomorrow. Even if that comes in good, which it has, it's going to show that the inflation's been coming down, which it has, but it's not enough. Even if it comes in flat tomorrow and shows that we've had a big drop, we're not going to get a drop all the way down to close to 6 tomorrow. It's going to take several months of the economy showing that inflation's dropping, unemployment's relaxing. There are some signs that shows that unemployment's starting to relax a little bit. There's some signs that are showing that inflation's starting to relax a little bit. Those are great, but they're not like big, giant, flashing neon signs. They're very subtle right now. We're waiting for something a little more flashing, a little more neon, okay? Until we get that, we go back to the rule. It will stand the test of time. Great economic news is bad for mortgage rates. Bad economic news is great for mortgage rates, okay? So if we get a recession, that's going to help us have some really great mortgage rates. More than likely, we're going to hover in the 6 to 7 range for the extended period of time, because a lot of economists are now starting to look at it and say, shoot, man, we may not have a recession. The Feds have slowed down the economy. The Feds have kind of leveled it out. Instead of crashing it, they've kind of leveled it out and slowed it down. It's kind of getting old a little bit, because it's like they need to raise the rates a couple more times. They just need to just raise them and get it over with. But they're not going to do that. They're going to slowly do that so that we don't have a hard landing. We kind of land soft. It is what it is. That's their plan. But because of that, we're going to be in a slow motion thing for the interest rates. Interest rates are going anywhere for a while. So to break all of that down again, what do we talk about? Market right now, solid. Okay, not as many closings this year as we've seen in 10 years. So a very slow start to the year, but the market overall is solid. The reason we had such a slow start is because of interest rates. That's because of the economy. Okay, so crystal ball time. Okay, I'm gonna what was it, on the Tonight Show? I'd put the hat on. I can't even think of the guy's name. You know what? That's really gonna make me bad. I'll know it here in just a second. But we're gonna look at the future. Let's talk about what happens the rest of the year. All right, so I believe it was Karnak. That was the Johnny Carson thing. That's way back in the day, before my time. Anyway, so let's talk about what's going to happen next. As we hinted at the beginning of all this, I think that we're heading for a landing spot different than what everybody else thinks. I think everybody's thought, myself included, I thought we were going to end up interest rates in the upper 4s to low 5s. Buyers are going to be thrilled. Sellers are going to be thrilled. Everybody's going to come running back to the market. This year is going to be a lull, and then next year is going to be wham, bam, out the door, rock and roll real estate market. And that's not the setup now, okay? The setup now, because the economy just won't break, and all indications look like it's not going to break. Personally, I would not be surprised if we don't have a recession. Everybody's banking on a recession. Bank on a recession, bank on a recession. It may not happen. You just don't know, okay? The Feds, to their credit, are doing everything they can to land this thing as smoothly as possible without crashing the economy, which means it's a little bit more pain than we wanted to see, or that we needed to see to make this thing end quicker. But it is what it is. We may not have a recession. That's not a bad thing, okay? It is a bad thing if you're waiting for interest rates to be back in the 4s before buying a house. The new norm is here. And we're seeing a lot of reports saying that some of the buyers are saying, you know what, this is it, let's just do it. Because if you're waiting for rates to drop and waiting for rates to drop, you could be here a while and home prices are only going to go up. There's nobody that I know that owns real estate right now that says to themselves, that doesn't say to themselves, man, I wish I owned whatever it is that I own, wish I owned it 4 years earlier, 5 years earlier. We can't turn back the clock. We're here. You have to ask yourself in 4 years, where are you going to be? In 4 years, if you're going to be here, grab a house if you don't have a house. Move up in house if you want to move up in house. Move down in house if you want to move down in house. It's a great market to sell in. It's a great market to buy in. Okay? Because price is not overinflated. It feels like it, but you don't have 60 people that you're competing with on every house like we did just a couple of years ago because of the interest rates. But the home prices are going to keep going up because there's no homes out there. What we had in 08 and 09 with the crash, we saw a lack of building that lasted for several years. Put us millions of homes behind across the country. It's going to take at least 5, maybe 10 years before we catch up to where we're supposed to be right now. Okay? Lack of housing is a major issue that was born then that is still with us, and it's going to be with us for a long time. Okay? So, I say all that to say this. When are home prices going to go down? Home prices aren't going to go down unless you have this major amount of supply jump back in. But when we saw all the home prices go down, you had like 12, 13, 14 months of inventory for months and months and months and months before everything crashed. We have like 2 right now. And that's the highest it's been in 6 months. So it's not going to change. Okay? So if we're waiting, just know what we're waiting for. Because what you're waiting for may not happen. That's all. And I don't want you being surprised by that. The logic of the market, the bones of the market, they work. They'll always work. We don't have a lot of houses. Interest rates are not promised to go down into the 4s. I don't know if they're ever going to go down to the 4s like anytime in the next couple of years. Next time we have a major catastrophe or major issue in the economy, you get a major recession, yeah, you're going to see interest rates back in the 4s. And then is it going to be easy for you to buy? That's an issue. Okay? To me, it makes more sense right now to grab the house. Because you're going to kick yourself in 3 years. If the interest rates finally get down to the 5s and then 4s in let's say 2 or 3 years, you're going to kick yourself and you're going to be like, dang, I could have bought the house for $400,000 3 years ago. But right now it's worth $450,000, $475,000. I could have bought it for $4 and refied now and gotten the lower rate. And I'd be refining a much lower price than what I'm paying today. And you're going to have a lot of competition when the rates come back down. When the rates go back down to the 5s and 4s, everybody's coming back. So not only are home prices going to go way up, competition's going to go way up, okay? And the home prices are already going to be higher. The only reason it's a bad reason to buy right now is because home prices are getting ready to crash. Okay? That's the only reason. And there's no sign. There's no sign that that's going to happen. Okay? That's my opinion. Okay? You can at me if you want. You can yell at me, scream at me, give me a hard time on Instagram. I was on TV. I got tougher skin and you know what to do with. So give it to me. I'm fine with it. I'll give it back to you. Okay? Because I do this every day. There's no signs. I'm looking for them because I want to be the first one to tell you, hey, guess what? Ding, ding, ding. You'll see a YouTuber that says they're the first one to tell you because they're the same YouTuber that tells you all the time that the sky is falling. All right? I hate to give this guy up here a hard time. Rich Dad. Robert Kiyosaki. Love Rich Dad. Love his books. He's got a lot of those videos where he scares the heck out of everybody. And he's going to be right eventually. That the whole market's going to crash and all that stuff. Okay? But right now, when you look at the nuts and bolts of the market, there's no sign. So, there you go. You want to buy? Buy. Because home prices are going up. You want to sell? Sell. Because you don't have a lot of competition. There it is. The whole video in a nutshell. If you got questions, let me know. I'm always here. You find me on at Malone Home Team, Instagram. I'm on that crazy new Threads thing. I'm on Facebook. You can email me. You can find me at Kroger, Publix. I got 7 kids. I'm buying something all the time. So come find me. Let's talk some real estate. Talk to you. Bye.